Are your investments all over the place? You started off with a balanced plan, but now you have only tech stocks or maybe only too many ETFs. That's where portfolio rebalancing steps in. Think of it like a routine health checkup, but for your portfolio. Hi, I'm glad to be back with yet another topic on investing. Let's understand what is portfolio rebalancing. In simple terms, rebalancing is just adjusting your investment mix. It could be stocks, bonds, gold, etc., to stay in line with your original plan and also incorporate the state of the market. But why do you need this? Because markets move a lot in both directions, and when they do, your investment percentages across asset classes shift too. So if you had already invested 60% in stocks and 40% in bonds, and when stocks shoot up, this could lead to a rebalance in which you could book some profit. This is just one scenario where rebalance becomes a must for many of you. The most critical part of rebalancing is knowing what, why, and when to change the asset allocation and the weights in your existing portfolio. Why should you rebalance? Let's get down to basics. First, stick to your risk levels. You don't want too many eggs in one basket. Remember, we've talked about diversifying across stocks in one of our videos. Avoid surprises. If one asset class booms or crashes, it can mess up your plans. Stay aligned with your goals. Want to retire in 15 years? Your investments should reflect that. Buy low, sell high. Rebalancing makes this automatic. You sell high performing assets and buy the underdog. What happens when you don't rebalance? You end up making losses due to the following reasons: risk overload. High performing assets may dominate your portfolio, increasing overall risk beyond your comfort level. Goal misalignment. Your portfolio may no longer reflect your financial goals or risk tolerance. Missed opportunities. Underweight assets will recover potential might not contribute meaningful to your returns. Now the question is, what should be the frequency of rebalance? It's not as easy as it sounds. There are various factors you need to keep in mind, such as knowing your original plan, maybe 50% equity, 30% debt, and 20% gold. Whenever spot a mismatch, identify what's over or underperforming. Make changes. Sell what's gone over and buy what's lagging behind. Repeat regularly. Do this every 3 to 6 months or at least once a year. That's not all. You also need to identify the best time to rebalance. So, whether you are a DIY investor, a long term wealth builder, or even a part time trader, rebalancing matters. Now, you may ask, is there a way to simplify rebalancing? Yes, there is. By knowing when to buy, what to buy, to align my portfolio every time to the market conditions through a multi asset approach. Final thought: rebalancing may sound technical, but it's just smart housekeeping for your portfolio. And with AI powered portfolio like Allrounder, it's now as easy as checking your phone. So don't wait any longer. Start investing smarter with Allrounder.